Here are some of the old school fiats and how they are looking on the crosses at this stage of the game. Let's get more with Nick Twidale. He's joining us from FP Markets and he's here with us at Barangaroo. Welcome. Nice to see you.
Thank you.
Any thoughts on any of the aforementioned moves that are going on in the crypto and stablecoin space?
Certainly. I mean, I suppose, it's an easy gag. They're not as stable as we thought they were, are they? I think you're right. I think it is a fundamental time at the moment for the cryptoverse, and I think this is where we might see some coming to the fore and some certainly falling off as they have been very strongly. I think you look at something like Bitcoin, it's broken some what was key support, and I think Bitcoin and the major cryptos you can look at from a technical point of view. Most of the others I don't think you can. There's just not the data or the historical data to do that. I think it's going to be a very interesting space, as you said, to watch over the coming weeks and months. I suppose we're going to get boring and go back to normal fiat currencies, though, aren't we?
Why not?
That will be boring. They're more stable, of course, at the moment, at least in the stable coins we're seeing now. Let's go have a look at that technical reader on the Bitcoin price at the moment. You talked about some of those big moves that we saw and cutting through that key support. What are some of the levels that you're looking for at the moment? Because I know a lot of people are pretty twitchy about what's going on.
I mean, I think if you look at this chart, you can see we broke it was a great break trade down through that 40,000 level on that sort of initial support line, and that's been a cracking trade. We're sitting just underneath. It's not been a great break so far, so I think a lot of technical traders will be wanting to see it a little bit lower before they really get into it. But as you can see, probably from that chart, there were a number of lows around that 30,000 mark, like Q2 2021. Once we're under there, it really does open it from a technical perspective to head back all the way down to sort of 10,000. So something like Bitcoin, you have got a lot of institutionals in the play now. You have got a lot of people watching it on a more institutional and a more traditional front. So I think you can start to look at it. Some of the others, it's a little bit more difficult. Personally, it's a fade on rallies and it's a hard sell on breaks. So if this continues to break through, I think it could extend down towards 15,000 fairly rapidly.
Okay, that would be a precipitous fall. Let's talk the Aussie dollar though, because obviously being impacted by the relative strength of the actually just the strength of the US dollar, but China also so key, really seeing some of the lockdown pain being reflected in the Australian dollar. But how is it looking technically now that we've seen it fall below that 70 US cent level?
I think, funnily enough, we've got that break that we were looking for even a couple of weeks ago, and we're underneath that 70 level. It does seem to be a little bit happier down here. Last night's data, obviously, I think still leads us to want to buy US dollars on dips. So I think the Aussie's still a sell on rallies. How hard we sell on those rallies or how hard we sell on that break, China is going to be a major factor for that. So if we do start to see, for instance, China come out of these lockdowns and a little bit of a light at the end of the tunnel, then Aussie will find support. At the moment, that doesn't seem to be coming or coming quickly enough for the Aussie. So I think there's more downside for the Aussie dollar short term.
Speaking of downside, can we go and switch over to the euro? Because it has continued to go and just get bleed lower. There is absolutely no one really willing to go and step in and try and stop it. Let's get a look at the other technical read of it and just see what we're looking at, because people are talking about parity left, right and centre at the moment. It makes me a bit concerned that we might not go and see it, but certainly the price action's been bearish.
Yeah, when everyone jumps on that parity bandwagon, it tends to then have one reason or another to not get there. But I think we do hit it in the medium term. As you can see, like that's a much longer term chart with those lows all the way back at the end of 2016, 2017. I think we're not going to need too much more, especially from the US side, and then even from the European side, to really force it lower. It does feel like we could get that perfect storm coming for Euro bears out there. We found good support around 104 initially, or just above 104 initially. We're hanging around 105. I think the next move from the States is going to be key. How we see those inflationary pressures moving on to the US futures, onto the yields. If the US yields start to really pick up again, and they've had a fantastic move, then parity is easily attainable and quite quickly, I think.
What about the pound? We've got BOE that's still quite hawkish. We've got slowing economic data in the UK. We actually get a GDP readout tonight as well.
Yeah, I think that's going to be another key, as it always is, but I think sterling's looking very, very wobbly at the moment. As you said, you've still got that hawkish Bank of England, but I don't think that can stop cable. And I think against the dollar, obviously, that we're seeing dollar move to the top side. There's probably more chance for the cable to go lower, harder than the euro at the moment. So I think maybe euro sterling longs, that we've had a decent move already, but I think that's probably one of the trends that will continue to creep higher. It's definitely a sell and rallies unless we see like a great print. If we see a great print, I still think it's just going to give us better levels to get into short positions.
Just to round off, just a broader view on the greenback, because it just seems to get so much, it's either safe haven bid or the least dirty shirt in amongst a very, very dirty laundry at the moment. How long can this continue for? Because it is helping to go in tight in financial conditions. If it reaches a point that it gets too tight, of course, the Fed might go and decide to release that pressure valve. Are we getting close to that kind of point?
I would say we're getting a little bit closer, but I don't think it's anything we're going to see immediately, and I think that's why I'm still pretty much bullish on the dollar. It does feel like we're starting to hear signs of changes from the Fed and probably from the whole US market, but look at last night's data again, you can't really go too far up against it. It's getting very tricky for the central banks, I think, and it's probably because of what we've had with the Ukraine and that geopolitical influence. I think they're in a little bit of a rock and a hard place. But short term, I don't see the Fed changing their tune. So it's buy dollars, wear dimes.